This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me once again this morning Ty Andros for our third session this week, a session on Crony Capitalism. Ty is the president of TraderView, publisher of the TEDbits website, and writer and editor of his well-recognized newsletter, also named TEDbits. Welcome back, Ty.
Thank you for having me, Gord.
I'm again looking forward to this session. This has been a lot of fun. But before I do, I just need to touch base on some mechanics here. We have slides to guide our conversation, as is usual. And I would ask our listeners to open the slides to full screen viewing. I get a lot of feedback about the slides being too small to see, and that's because you haven't opened them up to full screen viewing, which really makes a difference, whether you're on SlideShare or YouTube. Both have icons in the bottom right corner that allow you to do that quite easily. I also solicit, and Ty does too, your feedback or comments or questions that you might have so that we could address those possibly in future shows. Last point I'd make, Ty, here before we begin is that the series that we've already done on financial repression, a 4-part series, and a 3-part series on growth and the fallacies of the GDP, I would encourage our first-time listeners to revisit. I think you'd find them extremely informative, and I happen to believe they would also support some of the things we'll be talking about here this morning. Now, I'm going to jump right into these slides that you brought so that we aren't short of time, and I have up here your first slide on Wall Street reform and the Consumer Protection Act.
Well, Gord, as you know, this is the third part of the series. The first one, we defined capitalism versus crony capitalism. The second one, we showed how it comes about. And now we're going to show what it is. And the Wall Street Reform and Consumer Protection Act couldn't be further from the truth. It doesn't reform it. It expands the corruption. And it doesn't protect the consumer. It exploits them. And, you know, we gave some quotes in that last segment, and we urge all the listeners to go back and review those because they set the table for this segment. But anyway, this is the face of it, and it's the auctioning of the financial and banking industry to the biggest campaign and finance contributors through Dodd-Frank, also known as the 19 too big to fail banks, insurance companies, brokers. We've now, because they've just expanded systemically important industry participants to the exchanges. It's just a broadening umbrella of private sector insurance on ensuring the future prospects. And, you know, Gord, in capitalism, it's really one of the critical components is that, young competitors come and give better products for less money. And the whole idea is do any of us think we can cheat death? I don't think so. You really can't see corporations around from 100 years ago except for small anecdotes. Same thing with currency systems. They die. And the idea that you can write a little piece of paper and outlaw death or the fall of, old organizations, economies and countries and currency systems go through, spring, summer, fall, and winter. And of course, this is trying to prevent that cycle, because we are definitely in the fall and headed towards the winter, where things die and have to be replanted. And this is just an example of it. The Wall Street Reform and Consumer Protection Act, which is called Dodd-Frank, is 2,700 pages of political corruption, crony capitalism, regulatory buffoonery, and political rent-seeking along the lines of the tax code. It was supposed to fix Wall Street and the banking system. It does nothing of the sort. And to put the enormity of this legislation into perspective, I just want to point out that when they created the Federal Reserve in 1913, it was 31 pages. When they prohibited and divided banks from brokerages in the Glass-Steagall Act, was 37 pages. The Interstate Banking Act of 1994, which was, basically the savings and loan crisis, was 61 pages. The dreaded Sarbanes-Oxley of 2002, which destroyed the venture capital industry and cut IPOs in half, was 66 pages. The Graham-Leach-Bliley Act repealing Glass-Steagall was 145 pages. Of course, that's when banks really came out of the closet as hedge funds. And this is, Dodd-Frank is 15 to 50 times the size of those epic legislations and far more toxic to capitalism and wealth creation. And it just, it's a testament to the amount of corruption that is now rampant throughout the West and is actually precipitating the crisis rather than solving it.
In our opening session, the first of a series, I had a chart that mapped back to my thesis paper of a grid of how we're moving from individuals to statism and centralized government, and part of the theme that we've been on. But a big part of that axis is complexity and things becoming more complex. And it isn't necessarily that our society is just becoming more complex. We are putting complexity into our laws, as you're clearly demonstrating here with the size of the Dodd-Frank. And I would argue that it is intentional, because it's with that complex. Our politicians no longer even read these bills, and they make no bones about it. They don't have time.
Which should be a crime in and of itself.
Exactly correct. I think Pelosi even said we had to pass the law so that we'd have time to read it, so we could study it.
Inside.
See what's inside after the fact. I mean, pardon? But they expect their aides to have studied it and looked at it. Well, they don't have the experience. These kids are typically just out of college, and maybe they got a little bit of experience. They're certainly not authorities on all these different industries like banking. So who is passing the common sense and judging? A lot of this is totally written by the industry and handed to the legislators almost as a fait accompli with some minor wordsmithing. But the reason I'm into complexity, it isn't 2,700 pages. It's maybe one sentence. It's always about the horror is in the details. And therefore, these people who are manipulating through crony capitalism to build moats, to have competitive advantage, they know where those sentences are and how they can be translated.
It's trying to stop nature.
And the rest are oblivious to it. So I would suggest to our listeners, who in it is actually responsible for protecting us? Well, it's not being done. So you've got this huge group.
This is nothing more than predators. Okay, this is putting predators in place against the public. And these types of legislations are nothing more than Pandora's box. And just, like you said, and we have to open them up to see what kind of evil flies out of them.
As you said, I think it should be against the law that if something is passed, that a politician has signed off on it and says he's read it and studied, or she's read it in detail. I mean, we've done that with our presidents now on their 10Qs. If they have to sign them and they go to prison, it's very, very clear. We need to be doing the same with our politicians, because they just shrug it off.
Well, if they had to, let's do it. If they had to enforce Sarbanes-Oxley, then we'd see John Corzine in jail, right? Because he was signing off on those statements knowing they were false.
See, and another part of this, Ty, and you've talked about this before, is what happens is they have to vote party lines. And I'm not picking on either party. I'll show you the statistics that says there are so few mavericks. There are no mavericks left in either the House or in the Senate. They vote party lines. So therefore, who controls the agenda and the platform controls everything. So why read the bill? I mean, the party said this is what we're going to pass, and you just go along with the flow. Oh, you might be able to negotiate a little entitlement on the bill as a little pork, and that's the best you can do. So you negotiate a little pork.
Although that's changing, Gord. I mean, that's the reason they despise the Tea Party, because they're not really the party line, because, there's progressive Republicans and progressive Democrats, and they basically were the same thing. Tweedledee and Tweedledum, Gottis and Gambinos. A lot of those Tea Partiers are refusing to go the big government line.
I hear that, Ty. I'm just not seeing them voting that way yet. I hear them talking that way.
They're being corralled. They definitely are less powerful than they were at the beginning.
I agree. They're being muzzled. They're being quickly muzzled. I don't believe our politicians are necessarily corrupt or bad people. I think they get into a system that forces them into impossible positions. And they're really just puppets that are being very well played.
And were well rewarded. Obviously, when they retire to green pastures.
Okay, there's some of them that were just second-rate lawyers, couldn't make it as lawyers, taking up politics, and so they're looking for paydays. Yeah, I'm sure there's those too. But I'm giving them the benefit of the doubt. I think the system itself is set up where they've got to go along with things. And they would defend it by saying, look, it's better to be able to get something that's positive through than just marginalize myself totally.
Or let's take a look at the next slide, and we'll have some illustrations. Okay, with only 6.25% of the rules completed, the new regulations are already 3 million words. I'm going to tell you, how does anybody comply with that? Dodd-Frank is 2,300 pages of political corruption.
Ty, you're a small businessman, and I say that with total respect and your size. How are you going to know that you're in compliance?
Well, I used to be a small businessman. I've now had to join a larger organization to be able to be, have any kind of a future. And I used to be an independent IB, and now I am part of a group that's got, 20 times the size that I used to be. And because they can have a full-time attorney and full-time compliance, and, if need be, bring in other attorneys. They can deal with the regulators coming to the front door. I have no desire to get outside the rules and regulations.
So small businessmen today, you're almost forced to become part of a bigger body because you need that leverage to even have the legal and regulatory kinds of support so that you're not breaking the law.
Got to keep getting, there's safety in numbers. And I had to, and thank God for it. Because before I became part of the bidder group, which was now over 5 years ago, I was gotten to the point where compliance was taking 75% of my time, and I only was able to do my job of helping people with their investments and finding new customers 2 hours a day.
A lot of our listeners, Ty, just don't fully appreciate, because they're not in the industry, to know the kinds of hoops that people are now having to go through. Very unproductive hoops. Or if they're doing if the law is in fact right, what it's forcing small businessmen to have to do into compliance. And people use that to manipulate and get control. That's where crony capitalism really thrives. Not at your level.
It's how J.P. Morgan and Merrill Lynch gather up all the customers. They put all the little guys out of business so that theirs are the only products out there, no matter how bad they are.
Well, maybe not just the small guys, maybe even MF Global and larger guys.
I think MF Global is going to be a complicated story that we're going to find out a lot more about.
I don't know the story there, but all I'm trying to say is there's big battles being fought by big players.
Or I'll call it big battles fought by big players and cover-ups. I mean, you have to understand that politicians hate markets because they, unmask them for the liars they are. Why don't we take a look at the next slide, Gord? Who wrote Dodd-Frank? Who wrote it?
I'll answer that, Ty. The banks.
Well, like we got here, roughly 850 businesses and special trade groups. Employed 3,000 lobbyists, which were engaged in fighting, altering, and writing Dodd-Frank behind closed doors. There was more than 5 lobbyists for every member. Okay, it's just like the healthcare law. It was written behind closed doors and voted on with no one reading it. Okay, but look at that. $1.3 billion has been put into campaign coffers one way or the other.
It would be like herding cats to have 850 businesses and 3,000 lobbyists. In there is a controlling group with a louder voice, and usually that's the biggest one with the biggest money. So I would suspect out of those, the 5 major banks wrote it.
But it just like it was the Obamacare, it wasn't written by any legislator. It was written It was
Of course
actually,
not.
I'm sure, already written before the crisis, and then they just tweaked it after the crisis.
Well, sometimes, Ty, they're written by think tanks with a certain set of funding and a bias. Nobody should think for a moment these bills are being written by public servants.
Or read by them.
Yeah, that's what we're arguing.
Of course,
and what
what's
our
that called?
experience is
That's
telling.
called betrayal. That's called Benedict Arnold's. They're preying on the people they are sworn to serve.
Ty, they won't believe, in a lot of cases, they believe they're competent enough to read it. They don't understand it. It's like our discussion we had on GDP. I guarantee if we stood 100 senators here in front of us, 99 of them couldn't define what the formula is for GDP, nor would care, nor would be able to cite what might be possibly wrong. They would say, well, we have experts for that.
Well, we did the thing on growth,
But that's the problem.
GDP measured as spending rather than wealth production. It just is, it's mind-boggling.
So I'm just trying to give you an example. They're not even trying to hide it anymore. They just don't see that that's their role.
Well, what is their role?
Well, that's the question.
That's the whole thing. I mean, that's why the public has a 10% approval rate. They know that those people aren't protecting them. They're preying on them, and they know it in their gut.
Ty, do you ever have some of those sleepless nights where you may turn on C-SPAN and actually hear what was going on that day in Congress or the Senate? And what you see is one lonely guy, nobody there talking. Have you ever seen, other than when the president's speech, State of the Nation, where there's actually more than a few chairs that are filled? Well, that's unless they call for a vote, then everybody rushes in, says yay, and then rushes out.
That's how they set the foundations.
Where's the debate? Where is the debate?
Set the foundations with academics and studies and all that stuff to justify, I'll call it screwing the public.
The point I'm trying to make is our perceptions of how things work in Washington is flawed. Mr. Smith going to Washington isn't how it works anymore. They don't have those kind of rigorous debates to any kind of degree at all. It's just basically a rubber stamping process.
Career politicians, and the founding fathers did such a great job on the Bill of Rights and the Constitution, but they couldn't conceive of career politicians. And had they just inserted one amendment, the term limits like they have for presidents, I would argue that we wouldn't be this far down the road and this close to collapse. Written by whom, Gord? Who wrote it? Just like you said, it was the big banks. It was the big insurance companies. It was the big, it was rent seekers, people that want to capture and regulate people to themselves, and prey upon them.
Frankly, they're the only ones that really understand it well enough to write it. That doesn't mean they should write it, because they're going to write it for how they want it, obviously. I mean, it's just common sense. But the people who would read it, if they chose to read it, couldn't understand it anyway. And we don't have the expertise. Ty, when we had Bernie Madoff blow up, we had people that were actually screaming that he was breaking the law and filing reports with the Securities and Exchange for a number of years in advance. And nobody did anything about it. But he argued. And with the Securities and Exchange, what was going on, but they didn't even understand what he was talking about. And he argued that the Securities and Exchange don't have the abilities to stay current with the speed at which things are changing. Let's pick on high frequency trading. They can barely understand the concept, never mind how fast it's moving. Government is no longer capable. It shouldn't try and be capable. It should take a different way of approaching. But as we spoke about
earlier, when those regulators go in there, they're actually doing, job applications. They're interviewing for future jobs that pay them 10, 20, 30 times more than they're making as regulators.
That has been my experience and what I have witnessed and read.
And that's why when they go into a small organization, they will kill you because there is no future there. And they never go into the big organizations, or
they can go into the big ones and make a name for themselves because the smaller companies don't have the skills or the backgrounds
or the future opportunities.
And the future opportunities. You go into the bigger ones, they just ram it right down your throat because they know more about it than your 3 or 4 years in the Security Exchange. You don't have long-term employees in a lot of these higher level jobs. They're revolving doors like the politicians. So they just never acquire the depth and richness and understanding they have to do the battles in a vast majority of the cases.
Well, let's go along to get along. And the system is completely rigged now, and either you play by the games or you have no future.
Well, it's important that our listeners understand that it's not what they perceive it to be. Washington doesn't work the way that we were educated to think it works. Whether by design or just evolution, things have changed with these complexities. And I would argue it requires a complete rethink of total governance. But anyway, that's not for today's discussion.
So anyway, let's go to the next slide and take a look. Dodd-Frank was supposed to prevent future crises. I would argue that it did nothing to address any of the problems. Like I said, it was more of let's take advantage of a crisis to put in more, I'll call it political corruption and crony capitalism. It does nothing to address the problems with Fannie Mae and Freddie Mac, which everyone should remember really preceded the, actually it led to it was a catalyst, I'll call it the flashpoint of the crash of 2008. It does not eliminate too big to fail. In fact, it expands it, and the price of entry is campaign contributions. It does nothing to eliminate the horrific bubble and over-the-counter derivatives market, which have exploded and continue to explode, as exampled by J.P. Morgan Chase's loss. That is nothing. That $2 billion, they were just trying to get out. That was literally the width of the bid and ask. That had nothing to do with losses. It had to do with an over-the-counter marketplace where there was no bidder, there was no central marketplace. There was no way to exit. But to think that that happened on such a small amount of their derivatives book tells you how much the losses are going to be when they try to really unwind them. And if they pass legislation demanding that they unwind those derivative positions, they're actually passing legislation which will catalyze the losses.
Ty, just to put that into perspective, to show just the farce that Dodd-Frank is. We talk about derivatives. The swaps market is a $700 trillion in size. $700 trillion with zero regulations, and Dodd-Frank hasn't even begun to do it. You mentioned J.P. Morgan just now. J.P. Morgan's sitting on $70 trillion of swaps. And out of that, 54 trillion of it is interest rate swaps. And this whole debacle that just blew up with JP Morgan, they talking about whether they were covered and hedged in the credit default swap items. When interest rates on the 10-year move from 1.8 up to 2.3, that is a giant move. Somebody's on the wrong side of a trade. And if you've got 54 trillion, let me repeat that, 54 trillion in interest rate swaps, and the collateral increases have increased by, according to the Bank of International, 29 trillion last quarter. Somebody's getting hurt somewhere, somehow, in some way. Somebody's on the wrong side of a trade. And if you're JP Morgan and you are the trade, with that kind of size, you've got to suspect they might have lost something or got hurt a little bit. So when they talk about 2 billion, or 3 billion. When we're talking 54 trillion, something doesn't compute here to me, Ty. Does it compute to you?
No, and just giving it thought gives me shivers. Because, like I said, just to get out of the trades.
Dodd-Frank doesn't even begin to talk about any of this because they don't understand it and they don't want to touch it. There is zero, and let me repeat that, zero new regulations for controlling these derivatives other than trying to put some of them in from over the counter, which is unregulated, non-policed, offshore structures that are being traded completely without any transparency. But all they're trying to do is move the standard ones onto some kind of controlled exchange.
That's impossible because there's no participants to do that. You've got to have just the reason I like futures markets is because I know that there's hundreds, if not thousands, of bidders and sellers in one place.
I don't want our listeners to confuse for a moment when we're talking about derivatives specific to swaps with what Ty is referring to as the futures market. That's very well policed and very much regulated.
Well regulated, where people the counterparties have got to make good every day or even intraday. Whereas these things are in the dark. It's at a bank desk and there's no other counterparty except the guy you're talking to. The Fed used to had one mandate, which was price stability, and then it went to two mandates, which was full employment. Now, Dodd-Frank added a third mandate, and that is really important in its financial stability. And they gave them, now you've got a third responsibility. And that's why they brought the Federal Reserve in, and that's why you've seen Bernanke over the last 6 or 9 months talking about financial stability, because Dodd-Frank gives him the authority to step in, and I'll call it, ensure that the, cronies survive. I mean, it's basically, we want to prohibit things from dying. And, they're, like I said, they are expanding it monthly. In the last week, they've expanded the guarantees to the Chicago Mercantile Exchange, to ICE, to insurance companies, and they've done it very quietly. But now it's on the books, and now those people have moved inside, I'll call it the government umbrella. And of course, the people that are inside the government umbrella, the people that have to pay for it is the public. And let's go to this last slide. And basically, this is the definition of crony capitalism, the death of the private sector. And I'm talking about the financial private sector. The public servants regulate the competition out of business and customers into crummy products, not suited to their best interests, and leave the politically connected as the only game in town at a higher price. Gord, I have a question. Are there any mainstream groups like Morgan Stanley or JP Morgan Chase that actually give you an investment that you can make more money than you lose in purchasing power? And we did this in financial repression. I don't believe that there are any products out there anymore that give the public a real chance at being successful in preserving and building their.
Not that I'm aware of that are being offered to the public.
Okay, and I do it to my clients, but I've worked very hard to put it together. In a capitalist economy, this is creative destruction, where dinosaur corporations fall to more nimble competitors who give more goods and services for less. This will increasingly end that virtuous process. In other words, they're trying to put the little guy out of business who actually serves the customer rather than themselves. Then the next point, this is just the next nuclear bomb on capitalism, wealth, and income generation, and the economy by the terrorists inside the Beltway. And I use that carefully because, they want to declare, they call the private sector the terrorists. Anybody that wants to cut back government and, cut its size and its control and its stupidity is now branded, it's a type of cannibalism. And like I said, this is on purpose, folks, and the immensity of it is a testament to the size of the corruption. I urge you to go look at the previous sessions because we covered that. The victim is you and our economic futures. And, we've just gone through Dodd-Frank, but the healthcare legislation is more poisonous than what we've just covered in every respect. Written in a back room and not by legislators, but by their special interests and crony capitalist supporters. It's a depression written into law, and actually I'm going to call it the destruction of our financial system and currency written into law.
Ty, unfortunately we're past our hard line, and so if we have to end for today. Great session, great points. Any last comments you want to make here as we wrap up?
First of all, this is not doom and gloom. This is the greatest opportunity in history, but you have to be able to apply Austrian economics. And whereas there's lots of Austrian economists, they just haven't done their homework. They talk about the death of the dollar. The dollar is going to be the last to fall, folks. But if you do your homework, 80% of the wealth in the world is going to flow to 20%. And this is just one part of the big picture of everything that's unfolding right now. And it's like a murder mystery, isn't it, Gord? It's just, there's one new subplot or one new shenanigan every day.
Good analogy, Ty, with one caveat. You and I know who committed the crime.
We do. It's wonderful.
We're just watching the plot. It's like you know who did it right from the get-go. So that makes it really easy to see.
And there's a pretty big community out there that are, dedicated to that. But this is just one aspect of it. It's pervasive. It's inescapable. There's no, you have to understand that there's no avoiding it. In fact, it's the crisis that's going to clear the markets and allow spring and planting to begin. And it's just why you have to be active right now politically. I say that gingerly, but right now all the marbles are on the table. And this election is critically important. And I believe that Um, if things are not going well, the progressives will create a crash into the. We may not have an election. We may not have an election, which is as frightening as it gets. But this is the last. This is the stretch run of totalitarianism. This is the stretch run of socialism. This is creeping socialism going the final mile. Okay, and of course, Gord, would you agree that what's happening now has actually been slow moving and growing for decades, if not centuries?
Oh, certainly, I would agree. Decades, but slow moving has been gaining more and more speed and becoming faster and faster, like a landslide.
Well, if you look at the history of empires, they depreciate the currency up to about 80 or 85%, but that last 15% to zero is cataclysm. It's chaos.
I believe it started it started in 1913.
Absolutely.
Is effectively when this began. And it's when we forgot what our forefathers taught us. And our forefathers said that democracies are hard won and easily lost, and that we have to be continuously vigilant at all times. And I believe today more so than ever before, because of a lot of things that are changing with globalization, complexity, sophistication, that we're trying to point out in the series that we're going through. It's almost natural that some of the things, as bad as they are, would occur, would happen. But what's happening is we have stopped being vigilant and forcing some of the criticisms we're leveling at the government, at politicians, at the crony capitalists that are working within them. Ultimately, Ty, it's us that are responsible. We have elected officials, yes, but we're responsible to see it. We need to be an informed electorate and for us to take action. This show today, Ty, is our small way of trying to bring it out of what's going on. And every one of our listeners needs to find their own way of trying to stay vigilant.
Well, the education the education of the U.S. and the world is they don't call it public for nothing, and I'll call it it's only designed to do one thing and create useful idiots, as Lenin called them. I mean, the kind of things that we've learned, we had to go teach ourselves, but we were at least given the basic skills and the basic knowledge of history for us to allow us to do that, which they don't even give you those things anymore, and it's really just to create a class of victims.
Ty, in our recent Triggers webzine, we actually put out an article where it was stated by officials of how the process was to dumb down our society and how they were effectively doing it. And I encourage our listeners to read through some of this documentation. It's very enlightening.
Well, Gord, I want to thank you for inviting me, and it's always interesting to chat with you.
I'm looking forward to having you back next month, and we're going to talk about, as we said at the beginning of the series, malinvestment and mispricing, which we're going to take and expand what happens when you have centralized planning. Certainly, you get with more state control, it fosters crony capitalism. But when you start to get bad data, as we saw with GDP, you tie these together. What happens is you get malinvestment and mispricing, which feeds on itself. And what we're going to do is really spend some time showing how that happens and what it is and how to identify it. Because, frankly, that Ty, you and I would both agree that malinvestment and mispricing is today at epidemic proportions.
I defy anybody to show me one market that's properly priced. And of course, that's where the opportunity is. I mean, whether it be gold or real estate or bonds or stocks, or I defy anybody to show me one thing that's properly priced. And of course, that's where the opportunity is. Volatility is opportunity. But you have to know how to put together investments that can capture those opportunities. And that's what I specialize in. I specialize in creating absolute return alternative investments which make money when markets have the potential to make money when markets go up and down. And then I restore the functions of money and I convert your paper money back into reserve-backed using long-term gold and silver strategies. And I urge you all to subscribe to my newsletter, tedbits.com, and my website. They're free. And all you have to, and the reason you have to subscribe is because we have to take you through a disclosure process, which allows us to be hard-hitting. Gord goes through the same process. But we definitely want to stay on the right side of the law just so that we can continue to, Gord and I are what I'll call pamphleteers, just like from the American Revolution. And we're out there, and I call it bright, gleaming spotlights of truth and rationality. And I love it, and but at the same time, I have to salute to the powers that be or be exterminated like a bug.
Ty, we're break now, and I'm really looking forward to having you back next month. And so until then, take care of yourself and enjoy your new home in Florida now that you've relocated from the shores of Lake Michigan.
Well, it's just Athens in process.
Talk to you later.
Bye-bye.
Bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.